So, good afternoon to all of you. Today, we are observing the 21st webinar of the Vasudhaiva Kutumbakam series titled Achieving Sustainability in BFSI Sector. We have with us an eminent speaker, Sri Aditya Vyas, who is the Assistant Vice President of STCI Primary Dealer Limited. To start with the proceedings, we would like to have our Institute anthem as per our protocol. Now to just read the short profile of Aditya Vyas sir. Sir is the Assistant Vice President of STCI Primary Dealer Limited. He is a career economist working in the financial markets for over 2 decades. He was been in the advisory role in a bank and a primary dealer for the last decade, working as a microeconomist with the front offices of the esteemed financial institutions like IDFC First Bank and HTCI Primary Dealer Limited. He has a wide repertoire of responsibilities in tracking macroeconomic policy developments, financial market events, and market movements. He is a postgraduate MA in economics from Gokhale Institute of Politics and Economics, Pune. With this, we welcome Aditya Vyas sir. Over to you, sir.
Thank you, Dibyendu sir, and thank you, Ashish Thatteji, for inviting me to give this talk. And I was a little bit surprised because though we read and we keep a track of all the sustainability movements that are happening around the globe and also in India, I'm not really a person who is, as they have put out in the flyer or as it is probably made out to be. I'm not really an expert on sustainability, but we do keep a track of these movements because now, as you might all be aware, that I will also, before I embark on my talk, I will also like to thank ICMI for giving me this opportunity. And it is a great honor and privilege to be present here to present my talk. Um, Sorry, because of some interlude, I had to briefly move out. Otherwise, I just came in a moment late. My apologies for that. Um, so I was saying, so we broadly keep a track of what is happening around sustainability now, because I think many of you might have catched up. Am I audible, by the way? Hello,
Yes, sir, you can
hello.
share the screen, sir. You can share the screen.
No, I'm saying that. Am I audible?
Yes, yes, audible, sir, audible.
Okay, okay, fair enough. So yeah, I'll be sharing the whatever little presentation I have made. I'll be sharing with you. But before that, just as a uh, kind of a prologue, today, if you had a chance to read today's newspapers, Business Standard, etc. So there is this the president of the ICC, International Chamber of Commerce, who is visiting India and The COP29 meeting is going on currently. So he was basically he has given an interview piece to Business Standard, and in that he was making a statement saying that sustainability is no longer a choice. It is nothing fancy. Any company or any new institution, any financial institution or non-financial institution for that matter, uh, even before it embarks on its actual journey, it was to think about sustainability, because we are in a situation where the climate changes are now visible to all of us, and more so, and experts believe, people who are institutions like the IMD, the Indian Met Department, they expect the intensity of these climate events to go on increasing. Of course, we look more from where I come and where I work. We look more. We'll get into the SDGs, etc., in a moment. But from where I come, we look more at climate related events because it is directly related to something like agriculture, which is very important for inflation. So I am, the Bindu sir mentioned that I am a microeconomist. Actually, I work as a macroeconomist. So, so because we deal with here we deal with policies related to the fiscal side, to the monetary side, which is all in the ambit of macroeconomics. So we view, I saw the ICMI list of events that is to happen, and there is also a topic in going to be held in SSB, which is talking about sustainability through an economic lens. So, we look at these things with that kind of frame of mind, since we deal in government bonds. Our main core bread and butter of the primary dealer is dealing in government bonds. So, as you might know, recently from I think 2018 onwards, the government was basically mulling issuing sovereign green bonds. So it started doing that. So last year it issued around 16,000 crore worth of SGRB, as it is known, and this year it has issued around 20,000 crores, or it is going to issue, because the financial year borrowing calendar for the central government is ongoing. It will end by February second week, I think, first or second week. Usually it ends. So the issuance of sovereign green bonds for this year is underway. Now, there are many, so the literature is vast. So obviously, I'm not going to cover everything in this short period of time. It was not possible to take into account all the developments, but broadly, primarily the banking sector, what is laid ahead in terms of sustainability, and what is the RBI doing, because the banking system and the entire banking sector comes under the regulatory ambit of the RBI. Just like insurance for the BFSI, so it is banking, financial services, and insurance. So insurance will basically come under IRDI, and of course the remaining part, the equity, the capital markets, will most likely come under SEBI. So SEBI and IRDI, of course, both have already embarked on their sustainability journeys with sustainability frameworks in place already. So we will briefly discuss what the banking industry is doing and what it is expected to do by the RBI. RBI on its part is now, they have two things they have done apart from the core of the sustainability activity, is to basically embark on a journey where they are encouraging banks to accept green deposits, and also of course the as I said, they have already floated sovereign green bonds, because RBI is the debt manager for the government. So this decision obviously has come in consultation with the RBI. So of course the amounts are still very small. 20,000 crores is nothing. The monthly auction of GSEC is around 33,000 crores of late. Since COVID, we are seeing that we have a fiscal deficit of anywhere close to 14 to 16 lakh crores. So you can see that the 20,000 crore amount is really nothing, but still then it is a step in the right direction. Now, two things that I've already mentioned is Mr. Philip Warren, who is the chairman of the ICC, the International Chamber of Commerce. As I said, has conveyed his statements to you, and also the COP29 results are out, and many people are disappointed with it. because the member nations, especially the global north or the rich countries, they because of the tussle between the south and north, they have not really been able to put a definite number to how much money should be basically given by the north to the south to fight the climate change. Because global, and I'm mainly talking about climate change because amongst all the SDGs, I think this is the most prominent, since if climate falls, everything else falls. We I mean, we have got to survive that first, then we can build up the other SDGs on that. And of course, those SDGs are more long term, and they have a continual process, so to say, something like education, something like inequality. I mean, eradication of inequality and poverty. These are very long term goals. So, of course, they have given definite time. The UN has given definite timelines for the same. Still, I think that surviving is the core of everything. So, I'll be focusing more on climate change and responses of the central bank, the Indian central bank, especially to managing the risks arising out of climate change, because that is what we track more or less very assiduously on the desk. So I'll just be sharing a brief PPT. Just give me a moment. Yeah.
Sir, your PPT is visible, sir.
Yes. Yes. Okay. Yeah. So
হ্যাঁ স্যার নেক্সট উইকে ম্যাডাম নেই, নেক্সট উইকে উনি নেই, উনি বলছেন যে অকৃতি ওনার যে পিএ ও বলছে যে নেক্সট উইকে ম্যাডাম নেই, তবে আপনি মেল করে
here,
রাখুন, আমরা জানিয়ে দেবো যখন উনি ফ্রি হবেন, আসবেন আর কি
yeah.
কলকাতা,
So I
কলকাতার
think your
বাইরে
mic
আছেন।
is open. Yeah.
হ্যাঁ আমি তাহলে মেলটা পাঠিয়ে রাখছি, মেলটা পাঠিয়ে রাখছি। হ্যাঁ আর আপনার ইয়েটা, হ্যাঁ টাইমটা ওপেন রেখে দিচ্ছি, টাইমটা।
So here's a brief outline of the presentation. First is we'll briefly
হ্যাঁ
look at
কন্টিনিউয়াস
what do we
রাখছি,
mean by
ঠিক আছে।
sustainability.
হ্যাঁ
Then we'll touch upon sustainable finance and some aspects of it. And then we'll look into RBI's guidelines for the banking sector. RBI has only recently, February, as of February 2024, RBI has come out with draft guidelines. What we mean by draft guidelines is it is not official and nothing is with the stamp and seal, but this is more or less kind of indicative of what the RBI, the central bank, expects of the banks and the other financial institutions under its ambit. So we'll discuss the categories of institutions that come under the ambit of RBI, and also we'll touch upon briefly on the technology side of technology-driven sustainable finance. So this is broadly what I've planned for today, and let us delve into it right away. So the discussion around sustainability started. I mean, I have looked at ICMAI resources also, and they have excellent. You have excellent monthly publications where you deal with all the data and the news that is related to sustainability, especially the SSB. So sterling work that is being done in ICMAI. Similarly, all the other institutions that I talked about, SEBI, IRDI, they have all come out with their own guidelines as to what is to be expected and what changes are necessary for institutions to be more aligned to the SDGs. Now, this discussion, of course, has started long back because, as we know, climate warming due to industrial revolution started with the industrial revolution. So it has got a long history. Something in the sometime in the late 19th century, the whole discussion started, and people were assessing the temperature changes even then. Of course, the scale was much small and it was not a very fancy topic, so to say, or it was not in the vogue, not in vogue like it is now, because now people are getting affected by all these temperature changes. So 1987, basically, the United Nations Brundtland Commission defined sustainability as meeting the needs of the present without compromising the ability of future generations to meet their own needs. Now, when we read this statement, I, as an economist, immediately think about something like an overlapping generations model, because this is something that you cannot think about only in terms of what you are. You cannot think about this only in terms of the present, right? You have to think about what is going to be the implication of the actions, economic actions taken today on future generations. So, for example, you might be reading in the newspapers about a recent debate that is going on for the Great Nicobar Island, right? They are planning to cull around 13,000 hectares, mind you, of forest land, which is virgin forest land, to build a mega port there. Because India does not really have a huge port, so all the porting capacity is either in Sri Lanka, which is built by China, or in Singapore. So we don't have a port of our own. So what the government is doing is that it is culling around 13,000 hectares of jungle land and building a port there. Obviously, it has to get the necessary environmental clearances, etc., etc. But even that, people are debating that the government is basically, compromising on the biodiversity of the country, which should not be done, because that is irreplaceable, right? Once you do away with that, you can't really recreate those biodiversity areas which have been naturally formed over millions of years. That cannot be done, right? So that is what is happening. So it is a battle that has to be fought on many fronts. So exactly, the commission's definition talks about this. So today's generation has to be cognizant of the fact that whatever actions have been taken today will not be detrimental to the interests of future generations. Now, obviously, such a thing cannot be successfully. I mean, you cannot achieve development goals, sustainable development goals, by isolated silo working, right? It has to have a collaborative effort, which is why aptly your series is known as Vasudhaiva Kutumbakam, right? Which means that the entire globe has to act like a family, which sadly, I would like to note, does not look like happening. Case in point being the COP29 discussions that have come to basically not. Now, uh, over time, the UN, I started with 1987. So over time, the UN has also evolved and evolved its outlook as to what should be a sustainable development goal. What can be classified as a SDG. Now, at final count, at last count, the total number of SDGs were 17, and they're very broad based. And I would say they sound like very tall claims. I've written it very candidly, because the somewhere we in the markets, in other spheres of life, we see many things that are happening in alignment with this, but still we are seeing that efforts are somewhere falling far too short. I mean, the gap between the goal and the road is still quite wide. So let us look at what are these SDGs. I'm sure many of you might have already seen this, but so this is a famous chart. This is used everywhere. Uh, this is publicized by the UN. So first, of course, is no poverty, which, as I said, looks like a tall claim, because many of the best economists have not been able to solve this problem. Then zero hunger. We are still not. We are very far away from this, and there is a lot of on these two goals alone. There is a lot of criticism that the UN has to face, because the other stakeholders who are not part of the UN, say that much of the operations operate like a facade, and especially Latin American, African countries, and even to some extent India and other South Asian countries where the rate of poverty is very high, we are not really seeing any visible change. Of course, in these kind of as I said, these are very long term goals. And when we talk about such kind of goals, it is to be expected that development will be very slow. It cannot happen rapidly, but still then the gap that is assessed by way of numbers and the statistics that is being put out, it's not really very heartening. Third is good health and well-being. Now, this is a secondary goal, if you ask me, because first you have to provide for food. Only then we can talk about health. Of course, all this is a kind of a syncretic environment, as in everything has to go together. But as we know, even in India, quality education looks like a kind of a dream which we have yet to achieve. Other things, gender equality, clean water and sanitation, affordable and clean energy, decent work and economic growth, all these industry, innovation and infrastructure. This to some extent, India is now speeding up. As I can see, the countries, put up foot on the pedal, and we are kind of running to the at least the infrastructure part. We are doing quite okay, I suppose so. But as I see on the ground, anecdotal data of rural roads, etc., is not very good. Highways, of course, have been mended, and they have been. I mean, there the infrastructure investment is quite visible, and it is a happy development. Uh, Reduced inequality, sustainable cities. See, sustainable cities and communities. Even our capital is not sustainable. If you look at the smog data for last 10 days, you will come to know there's nothing more that one needs to say. So although efforts here and there, fragmented efforts are going on, but on a general policy level, we can say all our metros are going undergoing same problem. So recently there was a water crisis in Bangalore, a city which was known for lakes. So you can understand the kind of degradation that has happened over time. So responsible consumption and production, single-use plastic is still in vogue, despite bans put by states here and there. So everybody in Bombay, I've seen people use single-use plastic. So we are really not. I mean, the concentration of efforts really is not visible, unfortunately. Of course, I will be focusing more on climate action and sustainability risks to the banking sector, but I'm just generally going through the blue sustainability is still far-fetched. Life on land. I mean, if you are cutting down trees mercilessly, I mean, if you were to see documentaries produced by the West, even the Amazon basin is now even the Amazon basin is now almost 30% less than. Yeah, so thank you. So even the Amazon basin is now 30% less. So 30% less than what it was naturally. So you see that there also unbridled cutting of trees is going on. So if this carries on, then obviously you cannot really talk about sustainability in a meaningful way. So yeah. Of course, peace, justice, strong institutions, partnership for the goals. Now, when we are talking about strong institutions, the gentleman I was talking about, the International Chamber of Commerce president, he was talking about how the WTO dispute resolution mechanism has been frozen for some time now. So then if these things, and this will happen because you have differing views, you have the global powers in tension. So obviously that those things work against what we are trying to achieve. So, uh, so we move ahead. This, in brief, was an overview of what the SDGs look like, what actually the UN is talking about. But my own opinion, in beyond all the statistics and the numbers, my own opinion is that most of the multilateral agencies that we talk about have very little actionable power when it comes to acting on the sovereign grounds of different countries. Now, for poor countries, they don't have a choice because much of the aid comes from UN, so they accept it easily. But when you are talking about a country like India, which has considerable clout on the global markets and the global arena, then it becomes a tussle as to which goal has to be given precedence. So I think that, and it has been seen many a times when multilateral agencies deal with the case in point is just I mentioned the World Trade Organization, right? So dispute resolution and such things where multiple countries are involved, automatically the power of the multilateral agency is fragmented. So it is not really proven to be too effective. Of course, work has been done, no denying that, but it is not at a pace which one would want to expect from a entity like the United Nations. Moving on. So now something like sustainability. I mean, I gave you a broad-based definition, but sustainability is not something that can be easily defined. There is no objective definition. You can accept the definition that suits. So, if you look at three big agencies, one is the Sustainability Banking Finance Network. So that defines basically sustainability in terms of reducing the ESG risk from financial sector activities. Now we are, of course, dealing only with the BFSI, so to say. So, nature related. Here also, they are largely focused on climate change and nature related risks. Uh, Encourage flow of capital to assets, projects, and sectors which are basically green, which means environmental and social benefits are there, including climate change mitigation and adaptation. So this is a broad-based definition. Now, if you look at the European Commission defines sustainable finance as the process of taking due account of ESG considerations. Again, ESG is basically environmental, social governance considerations when making investment decisions in the financial sector, leading to increased longer term investments into sustainable economic activities and projects. So this is again one definition, broadly the same, but wordings are different. Maybe outlook is also, if we delve deeper into these institutions' mindsets, their outlook also might be slightly different. International Capital Market Association, again, it is leaning towards green and social finance, while taking more broad-based considerations into longer-term economic sustainability. Now, the problem is there is a kind of a mismatch between when you say longer term and shorter term. Okay, economists, as economists, always believe that in the long run we are all dead. So, as Mr. Keynes had pointed out around a century ago, that if we are talking about the long term, we are all dead. What is happening now? But the by design, the definition of sustainability is such that you have to consider a 30-year or maybe 20-year, 30-year gestation before you can see visible results of your activities related to sustainability. So now we come to financial systems. Then what does the UN say when does the financial system become sustainable? As we are talking about a roadmap to for making the BFSI sector sustainable. So when can we call the system to be sustainable, which means aligned to the SDG, uh, Sustainable Development Goals, most aligned to sustainable development, and what role is there for the economy and finance side of the country to play in that? So So SDGs and Paris Climate Change Agreement, they talk about a sustainable financial system which is aligned to SDGs and the goals embodied in the Paris Agreement, including all their ESG, again ESG, which is so the financial system has to be completely aligned to SDGs and also the Paris Climate Change Agreement. Only then the financial system or our BFSI segment in India will be termed as sustainable. So in that direction, what is the RBI trying to do, and what is the RBI's next steps, so to say, for making the entire financial system, whatever is in its ambit, making it sustainable? So we'll briefly get into the steps how RBI is trying to do now. Now, when you're talking about SDGs, okay, so some numbers. Here we require around 1.4 to 2.5 trillion uh, to achieve the sustainable goals. Gaps are very large, but it is only this number 1.5. This is annual, of course. The range 1. So here also there is a range because objectively which models you are using, how you are benchmarking the number. There is no kind of literature around that. People just, I mean, we also use these numbers very superficially. We don't know actually how these numbers have been arrived at. What are the, I mean, of course, there are books and books on measurement methodologies of ESG, but the understanding of those is limited to kind of a limited coterie. So how do you take into account various factors and risks and then price and then arrive at these numbers? But the numbers that are discussed about, at least in documents and various international fora, they are very small as compared to the total financial assets held by banks, which is again the number thrown up by the multilateral agencies. These are all UN numbers, right? So total bank assets are around 400 trillion. So 380 trillion actually, to be precise. And you are talking about a 4.2 trillion at max after COVID. So that's like roughly 1.2% of the total bank assets, which is nothing. Even that could really, even if you reach, we are not even there at the moment. But even if you reach that level, it could probably mitigate, or at least if the flow of funds is channeled to the right ends, it could still mitigate much of the or I should not say mitigate, but it should rather take us a few steps ahead in terms of attaining sustainability. So every 4 years, they have this Global Sustainability Development Report. The UN puts out GSDR every 4 years. So in that, in 2019, they had decided on four agendas, which basically are crucial. One is governance, other is economy and finance, science and technology, and individual and collective action. Now, of this, individual and collective action, according to me, is very important. Economy and finance, equally important. Science and technology, you cannot uh, uh, overemphasize the importance of science and technology in today's world, because many of the problems might be solvable just by addition of technology. And of course, governance is required even if individual and collective action is there, because we have to get there in a kind of a disciplined manner. So obviously governance, and of course to keep the monitoring mechanisms, the checks and balances in the system absolutely apt, so that all the developments are properly taken care of. Now, the fourth, again, after 2019, in the fourth year, 2023, the same report adds a fifth lever, which is capacity building. So this, of course, you see, it is a very evolving process. There, nothing is cast in stone as of it, because as we go along attaining the goals, we realize what and how things are to be done. So capacity building is absolutely necessary, because we are talking about a scale which is global. It is not related to one country or one boundary or one geography. We are talking about something which is on a global scale. So without capacity building, all the other four things, even if they are there in place, not much can be done, because the capacity building here that we are talking about specifically relates to channeling those energies into production of green products. So, and of course, such products, and of course, then all the other four pillars will come into play, where you also incentivize people and direct people, societies, to consume sustainable products. So the scale is kind of massive, and it will take everything that institutions, economies, societies have in their uh, kind of quiver, so to say, to solve this problem. So when the UN talks about transformation, it is basically from a transformation to a net zero globe, to a net zero world, where the amount of carbon issued, and I mean the amount of carbon put out is almost equal to the carbon which is absorbed by various measures that the institutions will take, institutions, industry, BFSI, everybody. So transformation, the path to that transformation, of course, this again is specifically related to climate, but more on a more broader scale, what we mean by transformation is where the globe is now aligned more or less to all the 17 SDGs that we were discussing earlier. So So here is a chart that the UN talks about, and all the five engines that we discussed, four which were put out in the 2019. Is the chart visible, by the way?
Yes, sir, it is visible, sir.
Yeah, yeah. All the five engines that we are talking about: governance, economy and finance, individual and collective action, science and technology, and capacity building. Uh, they have given the interlinkages, but according to me, everything affects everything in a very broad sense of the word. Because for all the economic and financial institutions that we are talking about, governance has always been the core principle on which the institutions have run. Without governance, you really cannot have institutions built and run both. Individual and collective action is absolutely necessary, because unless the civil society is involved in it, there is really little that institutions can do. Science and technology, I have already mentioned, and capacity building. So they have basically charted the relationships between all the four, and as you can see, more or less all the four are willy-nilly related to each other. So, and this is across basically entry points for transformation. So where do you get into a particular? So if you are entering into economy and finance, then you need governance, you need individual action, you need you need science and technology, you need capacity building. So all of it is more or less interrelated. So here the last is global environmental commons. So I'm a student of economics. So we were taught in public finance. There is a very elementary concept called, it's not elementary actually, but it is elemental to the subject, in the sense that commons, there is something called tragedy of commons. So basically, in a no man's land, people will not bother how fast they are degrading those resources. So if it is, so the example, the common example that is given is a grazing land which is under nobody's ownership. So everybody will send their cattle to graze there. But eventually what will happen is, because there is overgrazing, and there is no governance on it. Again, we come back to governance. The graze field will get emptied pretty soon. And then if the crowd which has to graze from it, if it is not getting the it will basically, there will be some section of the society which will remain deprived from this. So so this is of course a very crude explanation, but this global. So I would perceive Nicobar Islands as an environmental common, and it is not Amazon is again an environmental common. It is not for any one country to, because these are global kind of resources. And before using up these resources on an unprecedented scale, governments have to basically think about it manifold, or 10 times, at least 10 100 times, and all the consultations and etc. Which are done. The true question to ask is whether what we are degrading is replaceable or irreplaceable. The question actually boils down to that. In my view, something like Amazon or the Nicobar Reef, or for that matter, the Nicobar tree land, is completely irreplaceable. I mean, the government compensates by saying that we will, because Nicobar does not have that kind of land mass, we will plant trees on the mainland, but that doesn't solve the problem, because you don't know how many of the trees will survive, whether the biodiversity will be exactly replicated what you're killing there. So there are many questions which remain unanswered in this kind of a debate. And according to me, this is a serious degradation of uh, global natural resources, and this is happening everywhere. It is not only in Nicobar or Amazon or this is happening worldwide. And here is where individual and collective action will play a crucial role, as in the public or the civil society will have to step in. So this is something called Panchamrit, which India, I think COP 26, they decided and came out with an agenda. So these are some of the goals that India wishes to achieve by 2030. And the process actually, the timeline that they have given is from 2021 to 2030. So in a span of 9 years, this is what we want to achieve. Is basically 500 gigawatts of non-fossil energy capacity, 50% of its energy requirements from renewable energy by 2030, reduction of total projected carbon emissions by 1 billion tons from now to 2030. So basically, we are somewhere around 4.5, 4.6 billion tons of emissions. So they want to reduce it by roughly 1 billion tons. Reduction of carbon intensity of the economy by 45% by 2030 over 2005 levels, and achieving the target of net zero emissions by 2070. So this is broadly what India is trying to follow. Of the 500 gigawatts non-fossil, I'm happy to inform that India is already around half the capacity. So total non-fossil energy capacity is now at installed. I'm not talking about installed capacity, but total energy capacity overall is around 213 gigawatts, so which is not bad. So we are already halfway there, but now in the remaining, I think 6 years, we have to nearly more than double it. So that is where most of the green financing should be channeled, I think, because energy needs are going to go. So along with that, we will have to increase our uh, renewable energy capacity by a greater scale. So now coming back to BFSI in India. So RBI, as I said, released a draft disclosure framework. So when RBI says it is a draft disclosure, you also might know that it is nothing that is stamped with the seal, but it is a draft so that it is indicative that the institutions will follow or are expected to follow. These are basically guidelines. These are not really regulations per se on climate related financial risk in February this year, February 2024. Now, much of this is distilled from a paper written, discussion paper published by RBI in 2022 on sustainable finance. So much of what you are reading here is all there on RBI website, or you can see any of the material that is there. So nothing is official. By official, I mean nothing regulatory as yet, but these are guidelines which the RBI expects the financial institutions, banks, and urban cooperative banks also to follow. So, in my perception, RBI would cover most of the banking and financial services to a great extent, but this would also require, as I said, handheld efforts by SEBI and IRDA, and they have, of course, put their own comprehensive guidelines for institutions which are regulated by them. So generally, they call it RE, so regulated entity under the apex body or the regulatory body. So SEBI and IRDA would obviously cover all the insurance companies, and SEBI will cover all the capital markets, the entire capital market. So that broadly will be the entire financial system, the banking and financial system. So we can safely say that if all these three agencies come together and kind of put their efforts around this, around sustainability, then we have a roadmap and also the kind of wherewithal to follow the steps laid out in the roadmap. Now, I have already said this, amongst all the SDGs, for us, climate risk is the most potent and needs to be addressed urgently, as the RBI points out. Even in the discussion paper, this is the because see what happens is, I as a macroeconomist, I'm constantly tracking growth and inflation. Now, climate risk is something, and we have been seeing this for the last 6 years or so. There is a drought, there is a flood, there are flash floods because of climate change. Glacial meltdowns are causing floods in lower cities. So all this is affecting agriculture. This is affecting industry. This is affecting, to a point, services also. Like we see in Bangalore. So every year there is flooding in Bangalore. All the IT related services get affected, right? Manufacturing plants in and around Chennai, Kerala. So and this kind of event environment directly affects inflation as well as growth. Correct. So So we need to take into, we as in the bankers and primary dealers, we are more associated rather than all the other SDG goals, which are more or less humanitarian and also related to developing the society in many ways, like education. Of course, inequality is something that is of discussion, but again, it is not so direct and urgent as climate risk, because climate risk, once there is a drought, there is shortfall in crop, our inflation rates immediately spike up. So then it affects the bond yields. So then we have to keep tracking climate risks, which is why I'm giving probably um, um, not, I would not say undue, but more weightage to climate risks and the related policy measures that have come out as responses. So, as per the discussion paper, climate risks are now on the top as threats to financial stability. So, RBI puts out a financial stability report. So, as per the RBI, climate risks, as I was also saying in our tracking, but in the view of RBI, also climate risks are right on the top. So, first, the things that have to be addressed before you get into any of the broader based SDGs is climate risk. Now, there is an increasing need for the entire financial system to move towards green financing, but this is not easy. This is easier said than done. Why? For the simple reason, I mean, I need not tell you, you are all professionals in cost accounting. So the cost of moving to something like green financing is still very prohibitive. So even something like a sovereign green bond, when it is issued, and there is the investor will ask for a greenium, it is not easy to sell those bonds. So you see that the process inherently has a lot of hurdles. A company which wants to move towards green financing will have to go and bear the entire cost of building up capacity for something like to transform itself into a green entity. So, and before all that, of course, we are all finance professionals. So there is a need to identify, assess, and manage climate-related risk. That itself is quite difficult. Uh, when we talk, as I said, all these numbers are thrown up in this vast literature. Nobody, I mean, the common people, tomorrow a lay person like me going to the document and getting those numbers, I'll get that number and quote it, just like I've done in this PPT. But I don't know how those numbers have been arrived at. When we are talking about India's NDC need equivalent up to 2030, the number is something like 2.6 trillion, which means an annual expenditure. If we take the whole time period of 9 years from 2021 to 2030, your annual estimated expenditure is close to what? To almost $300 billion. Now, when we are talking about such huge numbers, we don't know how these numbers are arrived at. I mean, of course, the methodologies are there, and the risk assessment methodology, some of it we will touch upon also. But the thing is that there is still a certain amount of subjectivity associated with calculation of these risks, because as the models change, the parameters change, the outcomes also change. So there is no one. Of course, there are now, one would say that things are evolving and 10 institutions come together and say, okay, this is the standard benchmarking model, and we'll adopt this, and all of us have to follow these parameters. Then, of course, you have contrived some amount of objectivity. But I don't see it still the literature appears to be fragmented when we read through it. Now, what is the RBI's intent and strategy? So it intends to prepare a strategy based on global best practices, as I said, because this is a step which the RBI is taking of its own volition. Of course, it is in alignment with Panchabrit, etc., etc. And the RBI, as a responsible central bank, has shown great dexterity in stepping up the sustainable finance model. But what does it intend to do? It intends to basically base its strategy on global best practices on mitigating the adverse impacts of climate change, learnings from participation in standard setting bodies, and other international fora. Now, broad thrust of the strategies, the points are there. Overview of climate related risk and its unique characteristics as applicable to The regulated REs is, by the way, regulated entities. Broad guidance for all REs. So these are, again, as I said, these are guiding principles. So when you are a financial institution or a bank which is regulated by RBI, the guidelines are laid down for you as to what amount of disclosure you have to do, what are the steps that you take to be aligned more towards sustainability. So appropriate governance is one, that is the first. Strategy to address climate change risks and risk management structure to effectively manage them from a microprudential perspective. When I say microprudential, it means it is institution or bank specific. Now, because the nature of business also will slightly vary. I mean, some bank like SBI, which has a presence throughout the rural and urban geographies of India, will have a very different take on what it means to be sustainable, as opposed to a small finance bank, which is largely located out of Bombay. So, so such things have to be done with a prism of microprudential perspective. It has to be the individual institute, not the individual, the institution's take or the firm's take on what it thinks best suited to them. Hence, I am saying that there is, in various aspects of sustainability, there is still a good deal of subjectivity, and we are, of course, moving towards objectivity slowly and slowly as we go and learn as to the climate disasters that are taking place, which is a very unfortunate way to learn, but there is no choice. The various disasters that are taking place and the reactions of the firms and the impact on bank balance sheets and institutional balance sheets due to these climate related risks. So this is a continual evolution and a continually evolving process that we are going through. Hence, RBI has laid down guidelines for the regulated entities. So, third is exploring how forward-looking tools like stress testing and climate scenario analysis can be used to identify and assess vulnerabilities and REs. Now, all of us know what is stress testing, okay? And of course, scenario analysis also we are aware of. So, when you put a set of parameters to extreme stress testing, or when I say stress testing, it means it is extreme, and also climate scenario analysis for climate ranges, then you will arrive at some numbers or some parameters, whether quantitative or qualitative, which will kind of tell you what are the vulnerabilities to REs. So as I was talking about SBI, so when you are in a rural setting and you have a lot of farm loans given to essentially farmers who are small landholders, and there is a drought and they can't get the crop, so there will be obviously a rise in delinquencies. Now, quantify all this, you need some kind of a model or some kind. But again, when the model is talking about the arithmetic of these risks and the emanating losses, you have to understand that parameterization of those models also somewhat leads to subjectivity, because the person or the institution entering those parameters will also have some kind of confirmation bias. So in that sense, we really haven't had any new development as to the risk models that are needed, objective risk models across institutions. So hence RBI is absolutely right in saying that SBI needs to have its own, another some XYZ bank needs to have its own, a small primary dealer like I mean small, not, I'm not saying small, we are one of the first primary dealers, but a company like us who deals largely only in the government bond market needs to have a take which takes into account our parameters and how climate risks affect us. So it can't be really that way. I think it would be also counterproductive to bring 100% objectivity. That would really not be desirable. So fourth is climate risk related financial disclosure and reporting for REs. So this, of course, we will see there are a lot of points that we need to touch on. Capacity building again has to be there, and voluntary initiatives, whatever the bank feels or bank or the firm feels is a step in the right direction towards gaining more sustainability, has to be done on a voluntary basis. So am I clear so far? Any doubts? So, what are the impact channels? So, hello.
Yeah, sir, you continue, sir.
Yeah, yeah. What are the impact channels? So now the funny part of this is that transition towards sustainability is also like a double-edged sword, because institutions and banks are prone to risk from the process of transition also. So when we are taking steps to mitigating climate change, that also might adversely affect the profitability and overall balance sheet of the financial institutions and banks. So, broadly classified, the climate risks, how they can affect the BFSI sector. One is physical risks and one is transition risks. Now, physical risks, obviously, as you might have rightly guessed, is basically risks arising out of direct climate events like the drought or the flood that I was talking about, or you know, excessive smog that we are seeing in Delhi. So extreme weather events that so acute physical risks or uh, uh, the assessment of this risks is also not very simple. It depends basically on geographical location. So you are in a seismic zone, and there is an earthquake that is caused, and your office is taken for a toss. So that basically encapsulates such kind of flood, or the annual flooding that we see in Bombay, and how it disrupts business across banks and financial institutions, because Bombay has a lot of banks and financial institutions. So these kind of immediately visible risks are categorized as physical risks. Now, what happened? The impact depends on geographical locations. So you might have a rural area where there is flood, but in spite of delinquencies etc. to the banks, the cost might be relatively lower than what it would entail in a urban geographical setting. So of course, and climate patterns are also quite different across geographies, which is what I wanted to point out. And here again, there are 3 points. So cash flows. So here I forgot to mention one thing. Uh, Chronic physical risks are basically long-term events that take very slow, that are very slow and take a long period of time to manifest. So something like continual pollution and affectation of the pollution on employees, etc., etc. So those kind of risks are also accounted for. Now, here you see, in Bombay, as I was saying, every year there is a flood. So not necessarily every year, there is some building that is washed away, but because of those floods, there is, it presents business disruption, and it might. I mean, not in Bombay. I have not heard of a on the ground case, but in case of a farmland where there is chronic flooding, then if the land has been kept as collateral with the bank, and the land is basically now continually vulnerable to risk of flooding, the value of the collateral will eventually go down, right? So it will present a risk to the bank who has lent to such a farmer. So these risks also have to be at the outset, before lending or before doing any activity. Now the central bank is also kind of goading the financial institution to account for all these risks. Obviously, in a kind of not so subtle way, it used to get accounted earlier too, but now they are saying that quantify these risks also, and you incorporate these in your lending models, so that you are better prepared in term of the if the eventuality actually happens. So severe weather events like the cloudburst we had in 2005 in Bombay. So for 3 days, the entire banking and financial sector was shut down and had come to a standstill. So many properties were also destroyed. Data centers have to then more accentuated thinking came about of having a BCP kind of setup. Not that it was not there earlier, but then people started giving more importance to this because the actual head offices, etc., were inaccessible during that time. And Of course, I have written, thereby affecting its ability to provide financial services to its customers. So the RBI had to basically declare ad hoc holidays on those days because nobody could work in the bank. So such risks have to be accounted for. Now, the next type of risk is transition risk. It refers to risks arising from the process of adjustment made towards a low carbon economy. So even while you are trying to become a low carbon economy, the risks are there because businesses then have to shift to green resources, have to basically shift more and more to become sustainable. In that process, the older technologies that are there, the legacy technologies, they become redundant. And obviously, as we all know, that too has a great cost which has been incurred by the financial institution. So all in all, it is not a very smooth and simple process, but the RBI is trying to kind of guide the way through and take the banking sector at least as smoothly as possible to the process of transition. Now, how it has an impact? So, transition risk drivers can be categorized as climate-related mitigation policies, which could include reduction in financial valuation or downgrade in credit ratings of businesses adversely affecting the climate, or introduction of subsidies to encourage the use of energy-efficient goods and processes. Now, technological advances can contribute to energy transition, increase the use of non-fossil fuels that reduce greenhouse gas emissions. And these are, of course, the drivers. Shifts in public sentiment, including that of consumers and investors, can affect the economy and the financial system. So, obviously, here the individual and collective will, if all of us decide to go into the green side or transition to the green side, then our behavior and our products that we buy uh, from the market and also where we work for producing those commodities will all undergo a shift. That, in a way, is a risk to the company because it has a legacy of producing those products. So now if the market decides that no, these products are unviable and unsustainable and we need to shift, then obviously the firm in question will take a hit. So when we look at the BFSI sector as a whole, uh, think about it as a risk manager. So main function of the financial industry is allocation of capital and to channel finance. So the expectations from BFSI are very high to achieve sustainability. How it can be done, that is a different story altogether. So all regulated entities need to understand the interaction between climate and environmental risks and their own business activities. The first step is that the financial industry should also identify, of course, this is all laid down by RBI, by the way, the Reserve Bank of India. The financial industry should also identify the potential effect of such risks through various prudential risk categories. Now, here again, the financial industry has its own way of thinking about risk. So, any risk that comes to us, we first classify it into four types, or rather, try to have a taxonomy of risk. So, what is the common taxonomy? One is the credit risk, one is the market risk, operational risk, and liquidity risk. So what are these risks? So rising frequency and severity. This we have already discussed. As a matter of fact, rising frequency and severity of extreme weather events can impair the value of assets held by banks, by the bank's customers, or impact supply chains, affecting customers' operations and profitability and their viability. So this is one of the risk which is termed as credit risk. Also, another thing that is not written here, but now it is come into debate more and more, is that they are talking of rating the financial institution on the basis of its sustainable activities, which might result in some kind of a if the um, bank or the financial institution in question is not sustainable enough or efficient in terms of achieving sustainability enough, it might go a kind of a reputation risk. That risk is not written here. So that also is one of the risk, and it eventually, as we evolve, I think that also should feed into the credit risk. So a lower reputation in terms of achieving sustainability should eventually over time lead to a lower credit risk. Not that it is happening too visibly now, but I mean that risk is not written here. So market risk is the most common risk, and we live with it day in day out. So market risk is what? Exposed to decline in valuation and increased volatility in their investments because of shifts in investor preferences or climate-induced adverse effects on the underlying economic activity. So if we were to give an example, bank is the best example. So lending and borrowing is the main business of banks. If that is affected, and investors also, maybe the bank is not using enough online resources and it is still based out of on paper, going and coming back and forth, which is not sustainable. I'm just quoting this as an example. I don't think that any bank nowadays operates too much on paper. Most of them have shifted to online, and we circulate online receipts, etc. But just as an example. So, and investor says, no, this is not right, and I won't do business with you. So, kind of that kind of risk also, in a way, it is also a reflection of the reputation of the bank. So, what I was talking about. So, reputational risk is also also takes precedence over all the other risks. So, increased demand for liquidity to respond to extreme weather events or the difficulties that may be faced in liquidating assets given their negative impact. Now, imagine a situation like 2005 where we had a cloud burst. I mean, if we had to kind of um, respond not to the weather event but to the day-to-day business in context of the extreme weather event, and I had to lend or I had to borrow, and nobody is willing to lend or borrow looking at the extreme weather event, then there will be, I mean, it depends of course on the market situation also. If the market is liquid at that time, then there should be less of a problem. But if I have to liquidate certain assets because I am facing adverse weather events, I mean, there would be a difficulty in doing that. If there is a difficulty, then obviously we'll term it as liquidity risk. And of course, the next risk, the last risk is quite simple. Basically, what I was talking about, the BCP angle, the business continuity. So something like flood or earthquake happens your business in your area where the business is in operation. Business continuity obviously is hampered due to the impact on the bank's infrastructure, processes, staff, system. In addition, exposure to claims from stakeholders who have suffered climate-related losses and who then seek to recover those losses. So that is also one of the risks that banks have to face. So now, disclosure of what the bank is doing or the financial institution is doing, there are four thematic pillars that the RBI has laid out. Uh, Now, before I get into all these, the regulated entities are classified into these five criteria. One is all scheduled commercial banks, excluding local area banks, payment banks. Um, Second is the regional rural banks, all Tier 4 primary urban cooperative banks, that is UCBs, all India financial institutions, AIFIs as they are called. So Exim Bank, NABARD, NABFID, NHB, and SIDBI. So all these institutions will basically follow the same guidelines that I'm talking about, and all top and upper layer non-banking financial companies, of which I am one. So HTCI PD is one of the top and upper layer non-bank NBFC. Basically, I am a non-banking financial company, so I also am included in the regulated entity, which comes in the ambit of RBI. Of course, all parties who are not in the regulated entities as such can voluntarily implement the disclosure norms. If you want to do, this is a good step, and kind of you will be perceived as an institution, you will be perceived as a healthier institution if you decide to disclose the various steps that you are taking, and are you in alignment with RBI's guidelines. So this generally disclosure also means that you disclose the parameters which are laid out to RBI, as well as put it out in the, according to RBI, you must put it out in your public disclosure, which means your annual reports. So when you talk about disclosure, the first pillar is governance. So it should detail the governance processes, controls, and procedures used by the regulated entity to identify, assess, manage, mitigate, monitor, and oversee climate-related financial risks and opportunities. The RE shall, amongst other things, that is inter alia, disclose the board's oversight of climate-related risks and opportunities, and senior management's role in assessing and managing climate-related risks and opportunities. because these risks also create opportunities for bank. Like you can come out with new products, new innovation to manage kind of the sustainable goals or sustainability goal, if I'm to be specific. So strategy, it should detail the regulated entity strategy for managing climate-related financial risks and opportunities. Here we are talking, first we talked about governance measures. Here it is the strategy, how you're going to do it basically. The RE shall disclose the identified climate risks and opportunities over short, medium, and long term. Impact of climate-related risks and opportunities on the RE's businesses, strategy, and financial planning. The resilience of the RE strategy, taking into consideration the different climate scenarios. So we talked about scenarios and stress testing. So this is the next step. So this should also feed into the disclosure part. Third pillar is risk management. It should detail the processes to the RE's processes to identify, assess, prioritize, and monitor climate-related financial risks and opportunities, including whether and how those processes are integrated into and inform the RE's overall risk management process. The RE shall inter alia disclose the processes and related policies to identify, assess, prioritize, and monitor climate-related financial risks, processes used for managing climate-related risk, and extent to which how the processes for identifying, assessing, prioritizing, and monitoring climate-related financial risks and opportunities are integrated into and inform the overall risk management. This is actually the same. So here, uh, the metrics there now, when we are talking about sustainability as a goal, obviously there are metrics and targets. Metrics used to assess the climate related financial risks and opportunities in line with its strategy and risk management process. Scope 1, scope 2, scope 3 greenhouse gas emissions and the related risks. Now this is basically a taxonomy of greenhouse gas emissions. So scope 1 is basically direct emissions from the institution itself. Scope 2 is basically indirect emissions. That means you are buying electricity from a coal power plant. So the emissions are happening in the power plant, but you are buying electricity from that. And because you are buying electricity, that much emissions have happened. So this is a very simple example of the indirect emissions. And scope 3 greenhouse gas emissions are basically um, those GHG emissions which are not in scope 2, and they cover the entire value chain of the institution. So from all your vendors, etc. So basically emissions in totality and the related risks of those emissions, and targets used to manage climate related risks and opportunities and performance against those targets. So this is a very important part of your commitment and the disclosure norms that are, or the guidelines that are put out by RBI. They say that the targets, you have to disclose the targets used to manage climate related risks and opportunities and performance against those targets. So what has been committed and what you have achieved, that has to be publicly disclosed, like a report card basically. Now the actual roadmap, when does this become effective? For scheduled commercial banks, all India financial institutions, and NBFCs. That means our banking system as a whole, banking system as in excluding the urban cooperatives. So here, of course, one of the categories is not included as yet. That is RRBs, that is regional rural banks. I think eventually RBI will come out with guidelines for them also, or not guidelines. Guidelines are the same. Basically, the year of initiation will be put out shortly, I think. So it is under discussion, so it will come out shortly. For us, the governance strategy and risk management, the three first pillars, it starts from FY 25-26, so 2 years till. So FY 26 basically. So it will start in FY 26. And for metrics and targets, obviously we need data for metrics and targets to, I mean, we first need to show performance and then we can put it in a metrics and targets table. So that will start from 3 years hence, that is 2027-28. And for tier 4 urban cooperative banks, it will start from 26-27, that is 3 years, and 28-29 onwards, they will put a table which will have all the metrics and targets. So this is basically the roadmap for the banking and financial sector as laid out by the RBI. And other measures, of course, we have discussed all of this. So green deposits, RBI started kind of encouraging banks to have green deposit. By green deposits, we mean deposits which are specifically earmarked. Resources are earmarked, or the proceeds of the deposits are earmarked to green activities. And sovereign green bonds, again, the sovereign will earmark those funds for uh, enhancing the sustainability or towards green finance, channel those funds towards green finance. As I said, the amount is still small. We have a total borrowing of roughly around 11 lakh crore, so of which 20,000 crores amounts to nothing. Now, lending to renewable energy, but total green financing number is, I think, some 2.1 lakh crore, which is quite robust, but still very small as compared to our GDP. And lending to renewable energy under priority sector lending. So this is one way of incentivizing greening, so to say, is that RBI will classify all the loans you give to I mean, it has directed banks that all the renewable energy loans will come under priority sector lending. So this incentivizes banks to basically, because priority sector lending, PSL as they call, has a fixed percentage target by the RBI. So you have to lend so much to every bank, at least the public sector banks and all the banks, in fact, the private banks as well. All SCBs have to do a certain amount of priority sector lending. So if you lend to renewable energy, RBI said that it will be accounted for as priority sector lending. So, and last, the RBI of its own volition has done is that it has joined the central banks and supervisors network for greening the financial system, NGFS as it is known, as a member to foster international collaboration, which is badly needed. Now, this is a brief on technology, role of technology and sustainable finance. So, we all know AI and ML, so artificial intelligence and machine learning. So, as I said, the literature is vast, the data is vast. So ESG, of course, needs a lot of computing. Uh, how the numbers can come. They need advanced models, environmental economic models to assess the risk, not only to assess the risk, but to look at opportunity cost, etc., etc., which is not very simple. But in all this, technology can play a crucial role. And of course, the best part is predictive analysis, where something like a neural network model, if you can use it as a tool to predict the trends and potential impacts of climate change, we can mitigate much of the risk that, I mean, at least we can try to mitigate much of the risk that financial institutions and banks face, and make informed decisions regarding that. So, of course, a major problem in green finance is greenwashing, which is exaggeration of claims by firms and institutions that we have invested so much and we have done so much, but actually the activity does not show. So, their blockchain technology can uh, help in tracking the supply chain, tracking the value chains of those firms, and really assess whether what they are claiming is true or not, because otherwise it is very difficult. Of course, tokenization of assets can facilitate fractional ownership and investment in sustainable projects. So that, I think, some of it is actually underway on the global platform. At least I don't know how much of it is in India. Um, so smart cities and infrastructure, energy, efficient use of energy, reduce waste, and improve efficiency of urban infrastructure. So Internet of Things. Can collect data on energy consumption, emissions. So it is all basically usage of data, streamlining data to put the data to best use in assessing the various risks that we face. Same is with big data analysis and cloud computing. So here some specific use cases are there. Blockchain can be used to track the use of proceeds from green bond issuances, ensuring that funds are I mentioned this. Impact investing, analyze social and environmental impact of investments, helping investors make informed decisions and measure their contributions. Climate risk modeling, this also we have discussed. Basically, scenario analysis taken to the next level by using ANN type of models, artificial neural networks. Sustainable supply chain finance, blockchain can track the supply chain to ensure compliance with sustainability standards and ethical sourcing practices. So, of course, I wanted to pay a compliment at the beginning to ICMAI. This there could not have been a, and also to the government of India for selecting such an apt title for the series Vasudhaiva Kutumbakam. So basically, Ayam Nija Paro Veti Nana Laguchetasam Udara Charitanam to Vasudhaiva Kutumbakam. So Udara Charita, basically people who think about the welfare of others. We need to think about the world as a family. So I think we have run out of time, and I close my session here. And once again, thank you, Bendu sir and ICMAI for inviting me to give this talk. I hope that it was fruitful.
There are a few questions,
Yes, yes, sir.
sir. Sir, I think we will start with the first question. How can BFSI institutions collaborate with other industries to achieve sustainability?
Yeah, so good question. So actually, in a way, that collaboration is in a way already there because many of the banks and financial institutions are, I mean, not all financial institutions, but the banking sector largely is already in tandem with the industry in the sense that they already have loans, etc., and corporate deposits kept in the banks. So the relationship is already there. Now, to actually collaborate, we need more of conclaves or more of common fora where industries can come and discuss as to steps that can be taken in collaboration. Now, if we look at something like something crucial to agriculture, I mean something crucial like agriculture, a small farmer obviously will not go and walk into a bank and ask what steps need to be taken for sustainability. So there has to be a common meeting for us, something like maybe agricultural body, the Commission for Costs and Prices can organize a conclave where where the banker who's lending and the farmers can come as common, come on a common platform and discuss what activities can be taken to increase sustainability and then act accordingly. See here, I think there are, in fact, if I'm not wrong, there are a lot of fora where this is happening, but the problem boils down to execution and implementation because much of this is driven by cost economics. So it has to be viable for the farmer, it has to be viable for the bank. Here, of course, I'm taking a single specific sector like agriculture, but it has to be viable for both. Much of the impediment that comes to sustainability is that many of the methods of sustainability, some of them, of course, over time have, been able to reduce their costs substantially, but not all are accessible to all, and not all are cost effective for all. So maybe a large farmer can execute many of the sustainability steps as is, but a small land holding farmer might find it quite difficult because as it is to to farm in his environment is as it is very costly. So those are some of the steps. I mean, for industry, I mean, I know for since the time that I am working in industry, there have been discussions about sustainability and what has to be done to reduce greenhouse gas emissions. But apart from a few honorable exceptions, I don't think the industry by and large is, following in tandem. So it all boils down to execution. And of course, developing platforms where people can come and discuss and nurture common solutions, so to say, where where the banking sector can then play a role. So recently we had something like the SBI conclave where industry experts had come, and this was all across industries and largely from the banking sector. So there people were discussing and they were also kind of disclosing, so to say, what steps have been taken to increase sustainability. It is a slow process, no doubt. I mean, it's not a very uh, instantaneous thing.
Yes, right, sir. So another question has come. What will the BFSI sector look like in 10 years hence with a focus on sustainability?
Very difficult to answer today, but what I gather is that you will have more of green financing. Uh, you will have more of funds channeled, more as in relatively more to what they are doing today. I think today the amount is not so great. So in 10 years, I think even the world will move to a more sustainable kind of setup. So obviously, in line with that, the banking system also will look more green, hopefully. So let us hope for the best.
Right, sir. Sir, what do you think? What emerging risks and opportunities do you foresee for the sector in terms of sustainability?
So risks, obviously, most of the risks we have already discussed in the presentation. So physical transition risks are there. So one of the transition risk is transitioning to green finance. So till the time, so finance is what? Finance is all based on viability. So you cannot really force people to move to green financing, right? It has to be viable. It has to be good for the PNL ultimately, if you are in that business. So that transition risk is there. Now I am saying that in 10 years, that question that we answered, in 10 years we will hopefully see the banking sector move more towards green finance, but that depends on a plethora of factors like interest rates, like what are the responses by the central bank. Like the central bank is incentivizing people to lend to renewable energy sources. So in time we will see more of these measures, but ultimately it has to be financially viable for something to take off. Now, when I'm saying that the sovereign green bond pool is only 20,000 crores for this year in a borrowing of 11 lakh crores, you can see how much the gap is, right? So those kind of, so that transition risk is quite potent actually. So and over time, maybe it will increase, maybe it will decrease. We do not know. As consumers shift, or the preferences shift towards more green resources and more greening of everything, we don't know what kind of risks are there. Opportunities, of course, one of the things is that you could basically develop an innovative product. As far as banking is concerned, you can develop many innovative products, incentivize your consumers to invest in something like green deposits and more of those structured products, where if you where you can adopt conditionalities on that those products, saying that if you invest in these deposits, maybe I'll give you a slightly higher rate of return, something like that. It doesn't really happen right now, but in the future we can see such products being lined up for. So those are the opportunities that are there. Of course, when you see sustainability coming up in a big way, you will also have much of the associated industries also coming up with in alignment with sustainability. So then banks can have that much of a added market to them, where they can basically lend their monies and their finances. And those this, of course, specifically I'm talking about the BFSI sector. Insurance is one sector where they will have new opportunities, because you will have climate related events, increased insurance. The risks also will increase in those proportions, because actually if the intensity and the frequency of those climate events increase over time, then insurance sector will also have to bear the brunt of that. So it's a quite a mixed bag, but there are both in balance, opportunities and risks.
Right, sir. Sir, do you think any KPIs or any metrics determines the performance or sustainable performance of any organization, especially in the BFSI sector?
It is very good, sir. It is partial, because the numbers only tell you so much. So actually, to assess that, we need a kind of, I don't like the word, but still I will use it. You need a kind of holistic assessment of what the institution is doing. And performance indicators are good, but they only tell you part of the story. You need to get into the actual, like I was saying, right? I mean, some of it has been captured in the discussion, as in the indirect, the scope 2 emissions and the scope 3 emissions. Think about how much deep you have to go into the company's core to understand the total amount of emissions that the company is responsible for by its day-to-day operations. So entire value chain has to be assessed. The indirect buying, if you are buying electricity, like I said, if you are buying electricity from a coal plant, that has to be assessed. So it is a kind of a very, ongoing exercise. So only performing parameters, okay. I mean, we also read all that in the UN reports and the various reports that we see in the media. But actually, we don't know the environmental cost that institution, which is why I'm saying there is still a lot of subjectivity in it, and it has to be that gap has to be filled. I don't know how it. I'm not really the best person to assess that, but there is still a lot of gap in assessing the sustainability meter or metric of that, or I should not say metric, the overall sustainability of that banking or financial institution.
Right, sir. Sir, since you have highlighted the various aspects of the sustainability aspects of BFSI, do you think in the reporting of ESG reporting, what transparency and accountability does an organization serve to the stakeholders? How they can be more transparent?
No, as I said, so first step that the RBI is saying, and also we also, is to put it in your annual report, so that you are transparent, or your quarterly reports. But I don't think that anybody is putting ESG metrics in quarterly. I think many of the companies are now doing it annual. I think over time they are doing it. So companies as in banks, etc. So I think that is a good measure, because then, as we said, at least partially you are transparent. People know that, okay, this is the target that you have set, and this is what you have achieved as far as ESG is concerned. So ESG, of course, encompasses more than the it encompasses the social parameters also, which I have not really discussed. But environment, social, and governance, all three parameters, if you put, it is the best, so that people at least have a what targets, the numerical targets that you have, numerical, I mean quantitative and qualitative, both targets you have put and what you have achieved, both are in front of us. So that is, I think, a good measure of transparency. But as I said, for the regulator, he or she will have to delve deeper into the actual kind of emissions that the institution is responsible for. For the public per se, who have shifted their, I mean, goal, and the focus is towards sustainability, this I think is the first good measure. Then, of course, over time, this has to evolve as to how it can be more and more transparent. So the even the RBI, when it talks about disclosures, it talks about baseline disclosures and enhanced disclosure. So it is a movement from baseline disclosure to enhanced disclosure. That is an evolution that it will take, I think, in the next, as we discussed about, maybe in the next decade, most of the banks will move to enhanced disclosure, as to giving all the nuanced information about what is being done in their organization about sustainability.
Right, sir. Sir, you have briefly touched upon the trioca of regulator role, the SEBI, RBI, and also
Yeah.
IRDA.
Yeah.
Yeah. So, do you think that we are having over regulation, or we need more regulation?
So in this, see, it does not have a straight one-line linear answer, simply because of the fact that, as I said, at least for the RBI, I can speak that these are guidelines. So there is an element of non-regulatory kind of feature in this. Of course, it is expected by banks and financial institutions to adhere to these guidelines, and I'm sure that IRDA and SEBI also have. You can't really. It's very difficult to pigeonhole regulation in this. So if let's say tomorrow push comes to shove, and banks are regulated stringently on the basis of ESG activities, then at least today I can say that business will take a hit. So it has to be a collaborative effort. Though they are regulated entities, the terminology that we use is they are regulated entities. They are regulated for their business. Now, ESG is something still today, as I said in the opening, it is no longer a choice. Everybody has to adhere to ESG guidelines and the ESG metrics and performance, etc. But if you start imposing these as regulations, then there might be some kind of a setback to the industry. Of course, it is an evolution. So maybe these guidelines will now morph into regulation over time as the climate adversity intensifies. So it will eventually have to be done. But banks will, I think here the banks will have to be given some gestation time before the regulation. But as of now, if you ask me, if I had to, if you put a gun to my head and say that answer this, we in terms of ESG, I think we are still moderately regulated. We are not as regulated as one would want to. There is no,
Okay,
I don't think there is over regulation.
okay. Sir, the last question is that since you have touched upon these sustainability development goals, do you think these goals like net zero goal of India and other these milestones which India wants to reach, and BFSI sector is the most potent sector which can
Yes.
help in this reaching to this our ambitious goals. How you think this sustainability domain will change with the BFSI sector coming in achieving the sustainability goals?
The sustainability scenario might not change. BFSI will have to change to sustainability, I think. The sector will have to, which is what I was trying to answer in the earlier, that the transition risk for BFSI is great, like it is for any other industry. So people who have started earlier, they have an advantage, so to say, so that they have to take up less transitioning risk. But for the BFSI sector, when it is moving towards green financing, etc., it has to take additional risks as we go along. So the BFSI sector will have to modify itself to align to SDG. That is what the whole discussion is around. That is what the roadmaps, etc., that are being laid down by individual firms are discussing about. I mean, individual banks and financial institutions. So I don't think the sustainability, because now see the sustainable SDGs are also arrived after a period of evolution. So maybe there are more goals that are added, but I don't think the overall platform or the overall scenario for SDGs will undergo much change. But banking sector will now have to align, as will all other industries have to align themselves to SDGs. So see, I mean, to give a very recent current affair example, now because of the smog, the EV sales in Delhi have really plummeted. Why has that happened? Because government has taken away the benefits that come with owning a EV vehicle, and the EV owners are saying that you have to incentivize people to use EVs. Otherwise, they won't go and buy EVs because the infrastructure is not there for EVs, not as strong as a carbon emitting car. I mean, the petrol and diesel cars. So you have to incentivize people. So it is a very tug of war kind of situation. So both parties or whoever the stakeholders are, they have to show their wisdom in collaborating. And collaboration is of prime importance. Otherwise, this will all break down. The understanding of the problem and the assessment of the risk has to come from all stakeholders. It cannot be only for BFSI or only for the government or only for anybody. It has to be a collective effort, which is why I'm saying that 10 years still, according to me, is a very short time. Now they are saying up to 2030, we will be achieving 500 gigawatts of non-fossil fuel. I don't know how that is going to happen because see, it took around 12 to 14 years to achieve 211 gigawatts of non-fossil power. Now you're talking about doubling that capacity in a time of 6 years. In fact, more than doubling. So you will need finance to come in. You will need all the stakeholders to come in. You have to have industrial experts to build that capacity. So all these things, it is achievable if you show sheer the government shows that kind of will of implementation. But it is still easier said than done, I would say.
Thank you, sir. I think you have touched upon all the questions which our members had, and I thank you wholeheartedly to you, Kalpesh sir, and full team of STCI for making today's webinar, the 21st webinar, a grand success. And
Thank
I
you, sir.
thank you wholeheartedly, and I wish, sir, you attend our other sessions as a speaker
Will
and
do, sir.
also
Will do.
in other capacities. And
Yes, sir.
with this,
Sure.
we close today's webinar, and I thank my department, the SSB, especially Aditi Dasgupta, Dr. Aditi Dasgupta, Joint Director. Her support is immense to our department.
Thank you, ma'am.
I thank CMA Dr. Ashish P. Thatte, our chairman of this SSB, whose untiring efforts we we are we are getting the fruits. And also we thank our other SSB board members, including Dr. Ranjit Krishnan sir, who, as sir has mentioned, our Sukhinu Bhavantu. He is the editor of Sukhinu Bhavantu,
Yes.
and we are
Wonderful
publishing
magazine, sir.
publishing every month on 25th. This month
Yes.
also we'll be publishing. We will be sharing a copy to Aditya Vyas sir also for his comments and
Thank
for
you,
his
sir.
feedback.
Thank
And
you.
we are having our Vasudhaiva Kutumbakam every month. Next month we are having the first week of December, considering
Yes.
that December, the last week, is observed as a celebration day, means week across the world. So we do not want to put more pressure on our members or other stakeholders. They should also enjoy their year end. And so first week we will be having our session on sustainability from the lens of economics, where our board member uh, CS Shekhar sir would be taking the session. He is also our SSP board member. With
Yes.
this, and we also thank our President Vibhuti Bhushan Nayak sir and our Vice President TCS Srinivasa Prasad sir, who has always motivated us to organize more online events for connect with all our stakeholders. And I thank all the participants for your patient hearing. Thank you. Thank you, everybody.
Thank you.
We are
Thank you,
closing.
everyone. Thank you. Thank you,
We are
Bendu, sir.
closing.
Thank you.
Thank you, sir. We are
Yes.
closing.
Yes.
Thank
Yes.
you, sir.